Welcome back. It's time now to take a look at the top business stories. UAE to invest 500 billion dirhams into aviation sector. Emirates NBD to sell 49% stake of Network International. And we talked to the founder of Oku about growth within the UAE's restaurant industry. The GCC markets ended mostly higher today, and there were positive results across the UAE bourses. The DFM was up 0.5% to close at the 1,631 mark. Arab Tech Construction was up 0.5%, while MR Properties also posted gains. The company's shares were up nearly 1%. Dubai Islamic Bank's shares were up nearly 1.5%. Emirates NBD fell under 0.5%, while telecom operator Du gained over 1%. 38 million shares were traded, valued at 59 million dirhams. And over in the capital, the ADX gained 0.25% to close at 2,706 points. Both Through Real Estate and Aldar Properties fell marginally at 0.01%, while Etisalat rose 0.05%. 30 million shares were traded, valued at 55 million dirhams. And for a detailed discussion of how the local markets did this week, we're now joined by financial analyst Bruce Powers. Bruce, welcome back to the show.
Thank you. Good to be here.
Now, the Nasdaq CEO actually came out this week by saying that a merger between the Abu Dhabi stock exchange, and the Dubai Stock Exchange would, be very vital to foreign investors. I mean, what's the likelihood of this actually going ahead, do you think? And how much of foreign investment will actually come into the region by doing this as well?
Well, neither of the exchanges are very big on their own. So it seems like a merger would certainly make some sense. Now, even if it doesn't happen in the short term, it seems likely at some point. It's just a natural evolution of the market. The UAE markets have seen a steady decline in volume over the past several years, so regulators are looking for ways to boost interest and confidence in the markets here. And so this merger will certainly help in that regard if it does happen. Now, as far as attracting foreign investment, that's a long-term process, so it's pretty difficult to make any determination of what the impact might be and how long it might take. But we get some indication of what it's like now by looking at a recent third quarter report by the Dubai market, which shows foreign investors accounting for about 47% of the trading activity in Dubai, and UAE nationals the balance. And then 27% is made up of other Arab and GCC countries, and 19% from outside the region.
Okay, right. Now, moving over to the US. Now, the US markets have actually soared to pre-Lehman highs, haven't they? Is this something that we should be worried about, do you think?
Well, the Federal Reserve has indicated that they're going to continue to pump liquidity into the system, which is seen as good for stocks. The market indexes there have seen a steady climb over the past month and are now moving to new highs again. They're also coming out of a 6-month basing period, which is very bullish, or a sideways consolidation period is another way to look at it. So they're moving to new highs. Right now we see not the support of volume so much, but that we can attribute more to the holidays. The other thing that's bullish is that market internals are very positive. They're showing more new highs than new lows, and a greater positive versus negative stocks. A word of caution, though, in the short term, as we have the holidays, volume is low, so we can have faster moves down. So be careful in the short term.
Okay, well, thank you so much, and we'll see you next week, Bruce.
Thank you.
And now back to our main stories. The UAE will invest 500 billion dirhams into its aviation industry over the next 10 years to further diversify itself away from oil. The Gulf States Economy Minister Sultan bin Saeed Al Mansouri stated the UAE wanted to capitalize on transport and infrastructure with the aviation sector to develop connectivity and cement its global reputation. Officials also revealed that air traffic increased by 11% in the first half of this year, and that global tourism is expected to grow by 2.7% next year. And Dubai-based lender Emirates NBD will sell a 49% stake in its subsidiary Network International to UAE-based private equity firm Abraj Capital for 2 billion dirhams. The sale to Abraj, the biggest private equity fund in the Middle East, after raising about $7 billion since it started in 2002, is expected to be finalised in the first quarter of 2011. At least 3 private equity firms had bid for a stake in Network International. The payment solutions provider is fully owned by Dubai-controlled Emirates NBD, which has been considering plans to support the company's international expansion. The possibility of an increase in loans and bonds has sparked excitement within local banks as both Etisalat and TAQA lead UAE companies towards debt markets for refinancing and acquisitions. Etisalat is looking at $19 billion worth of loans and bonds to fund takeovers, including Kuwaiti operator Zain. This new interest in debt markets is a change in direction for the region, as acquisitions in the region differ from leveraged buyouts in developed markets. Mergers and acquisitions in Europe, the Middle East and Africa have also climbed 34% to reach $890 billion this year, compared to the same period last year. A report from Cass Business School said the UAE was the best positioned country in the Middle East in its outlook for M&A deals. On the way after the break, we talk to Oku founder and Arabian Business Small Business winner for 2010, Marcus Thesleff, about the rise of the UAE's restaurant sector.